How have the risks and complexities of investing in muni bonds changed over the last year?
The complexity of the muni bond market is higher, I think, than many people realize. It's an extremely diverse marketplace. It's fragmented into over 55,000 different issues. They're all traded over the counter, meaning no exchange. With the stripping away of municipal bond insurance, there isn't much in the way of AAA rated municipal bond paper outstanding currently. And each individual credit stands more and more on its own merits. So that creates more complexities on the credit side. Then there are structural and interest rate factors that have to be taken into consideration as well.
With interest rates at zero, the government holding them at zero, how are municipalities addressing the interest rate issue?
Well, municipalities are taking advantage of the Federal Reserve policy, and they are aggressively refinancing what is able to be refinanced. That is somewhat healthy from an issuer perspective, from the perspective of the borrower, because they can reduce their debt service costs year in and year out. It becomes tougher for the investor trying to find high levels of tax-free income, though.
If you're looking for return, you're looking for yield, what areas of the muni bond market should you be investing in?
There are really only two primary ways of increasing your income and increasing your yield in the muni bond market, and that is through extension out the yield curve. So the municipal bond yield curve is very steep. It's steeper than the U.S. Treasury yield curve, for example, so you can pick up extra incremental income by going out the curve. The other big opportunity in the municipal bond market to add yield and potentially add total return also are through credit spreads, that is lower rated credits. BBB rated credits can pick up roughly about 2 extra percentage points over and above AAAs, and non-rated, below investment grade rated muni credits, you can pick up 3 to 3.5 percentage points above existing AAA interest rates.
And last year was a blockbuster year for municipal bonds from a return perspective. What would you expect this year to look like?
The outperforming segments of the muni bond market on a year-to-date basis have been long-term bonds, which are on track to earn in the neighborhood of 7% for the year, depending on what interest rates do in the second half. And high-yield munis are on pace to return in the neighborhood 10% for the year.
This market is
stock picker's market.
Stocks have rallied this year.
We're coming into a Monday where we're going to